next guest has been talking about the inevitable crash for some time. We first read Crash Proof, his excellent book back in 2006, where he warned of the housing crisis and sure got that one right. And then, of course, The Real Crash, his book that came out to say we haven't seen nothing yet. We're about to find out if this is the real crash. Let's say hello to our good friend Peter Schiff. Hey, Peter.
Hey, how are you guys?
We're good. How are you, and how are things in your beautiful part of the world?
Well, it's getting warm here in Puerto Rico. So next week we'll be heading north back up to Connecticut. They're just starting to open things up. Puerto Rico really went off the deep end, I think, when it came to the shutdowns and the quarantine. We still have a curfew in effect. We're not allowed out after 7 p.m. It's really been a bit crazy over here, but at least the weather has been nice.
Well, that's good. You know, Puerto Rico's had a rough couple of years, and this certainly hasn't helped, but it's good to hear that they're, I guess, being cautious. How's commerce and the economy and all that?
Oh, it's pretty much shut down. It's hard to get anything done. And as I said, they're gradually starting to open up businesses. But, this is true all over the country. And, when I wrote the book, The Real Crash, I had assumed that the real crash would have come sooner.
Yeah.
But it's now going to come later. But this is it. I think that COVID-19 is the pin that is really putting a gaping hole in this bubble, which got a lot bigger than I imagined it would when I first wrote Crash Proof. And I warned about the then bubble in the housing market and the financial crisis that would result when it popped. My forecast was that the monetary policy that would be pursued and the fiscal policy in the aftermath of that to try to stimulate the economy out of what I said would be the worst recession since the Great Depression, I believe that monetary and fiscal policy would cause a dollar crash, and that would ignite massive inflation, and then the economy would collapse. Well, that didn't happen because instead of just attempting to reflate the bubble, they succeeded. And so that bubble really began to leak air in the last part of 2018. In fact, the air started coming out in 2016, but then Donald Trump kind of threw it for a loop by winning. And that really postponed the recession because it created a lot of false optimism. And in that environment, the Fed was finally able to raise rates from 0.25%, which is where it still was when Trump was elected. Remember, before Trump was elected, the Fed had managed just one rate hike. That's all it had, from zero, right? Despite all this talk about how they would normalize rates, they never actually tried to do it until Trump was elected, and then you had all this enthusiasm. And so during that, euphoria, the Fed was able to get rates up to about 2.5. Then all hell broke loose in the fourth quarter of 2018. We had the biggest decline in the stock market since the Great Depression. And that's when the Fed did what I was warning they would do on pretty much every summit at sea I was at. I said they would have to abort their attempt to normalize interest rates. They could never shrink their balance sheet. If they tried, they would fail. And all of a sudden, the Fed stopped hiking rates. They cut rates 3 times in 2019. They restarted quantitative easing. They stopped quantitative tightening. They started expanding their balance sheet again. So this was already happening before COVID-19 came along. Then COVID-19 happens, and that accelerated the process, right? A much bigger hole in the bubble. And the point that everybody is missing is that COVID-19 is the pin, right? The problem is the bubble that the pin pricked, because everybody thinks we had a great economy before COVID-19. We didn't. We have a bubble. We had a bubble. And so they think all we have to do is turn the economy back on and everything will go back to being great. Well, we can't go back to the way we were because we can't reflate that bubble. So there is no turning the economy back on because we can't reflate a bubble. So people are wrong if they think that, this is going to be a quick, self-inflicted wound and we're going to heal. It's not. I mean, yes, COVID is making it worse. But the problem is the economy that existed before COVID, and not only is the disease going to make it worse, but the government's cure is far worse than the disease itself, and not just to shutting down the economy. It's the financing the shutdown, with budget deficits and printing money. I mean, it'd be one thing if we were using our savings, right, to get us through the storm, but we're not. We don't have any savings. Thanks to the Fed, we're all broke, right? Everybody is living paycheck to paycheck. Everybody is levered up. And so while everybody is sheltering at home and not working, not producing goods, not providing services, the Fed is printing all this money. And in fact, there's a lot of people today that are sitting at home getting bigger checks from the government than they got from their employers. Except when they were working, they were contributing into the economy. Now they contribute nothing, but they're trying to take out by spending the government money. So we are creating an inflationary nightmare, right? All this government, right? This huge increase in government. People are not asking, how are we going to pay for this? Right? The government is spending trillions and trillions more than it was. The government is now actually spending more money from debt than taxation. I just looked at the numbers today. 51.5 cents out of every federal dollar spent has been borrowed. So the national debt is 25.5 trillion and skyrocketing. The Fed's balance sheet is 7 trillion. So we're getting this massive increase in government spending, and no one's getting a tax hike. In fact, people are getting tax cuts. So how are we going to pay for all this government? We're not getting it for free. So it's inflation. It's going to be a destruction in the purchasing power of the dollar. So all the problems I was worried about a decade ago are now much bigger than they were then. And so the inflationary consequence, the real crash, is going to be far bigger now than it would have been had it come sooner.
Well, and that's one of the things you've talked about on the summit and certainly at conferences, the fact that the longer we wait, the worse it is. In this case, Peter, you referred to COVID as a black swan with teeth. Like, it's bad because not only is it pricked to the bubble, but it's lingering and it's taking time, and we've got unemployment, we've got businesses closing and all that stuff that's going on. What do you see that eventuality like?
Well, look, this is another financial crisis, only much bigger than '08. I mean, it doesn't even matter now about the pin. The pin is irrelevant at this point because the bubble's already been pricked, right? And so what was the pin in 2008? It was real estate prices falling, right? Because once real estate prices fell, then real estate loans went into default. And then the lenders lost money, so it turned into a financial crisis. And also, people now had less wealth because the recovery was kind of powered by the wealth effect. People living in appreciated homes not only felt richer, but they can actually borrow the equity out of their homes and spend it. So you had a lot of spending that was a function of the real estate wealth, which all went away when the real estate wealth went away. But this is a much bigger financial crisis because it's just not just the mortgage borrowers who aren't paying their loans. It's everybody. Think about all the businesses that are defaulting now, right? Not just homeowners that are defaulting. I mean, this is not just a residential real estate crisis. This is going to be a commercial real estate crisis. I mean, commercial real estate kind of got a pass in '08 because when the Fed slashed rates, that kind of propped up the commercial market. But this time around, rates were practically at zero before the crisis. So it's not like going from 2 to 0 is that big a deal in real estate compared to the loss of rental income, right? You got the office buildings, people are not paying their rents, or companies are going bankrupt, and other companies are deciding, my people are working from home anyway. What do I need all this space? You got like WeWork and companies like that have all this space for sublet or gone bankrupt. And then you have the nightmare in retail, which, these companies were on life support before COVID. They were hanging on by a string, and now the string is gone. So the stores, the department stores, in the malls, in the shopping centers, these guys aren't paying their rent. But it's not just, the stores. Gyms aren't paying their rent, right? Look at now, the rental car companies are going under. Avis just filed. That auto bubble is now popped. Look at all the Americans that have borrowed money to buy cars. What's going to happen to the used car market when you have all these cars that the rental companies, they're not even buying new cars. They were big buyers of cars. Now they're going to be big sellers of cars. So the bubble air's coming out of the auto bubble. So this is the financial crisis on steroids as far as the amount of debt that can't be paid. And so the loans that are going into default, the losses that are going to be spread over the economy. And so in order to try to, prop everything up, the Fed is having to act on a much bigger scale. So everything it did wrong in '08, it's doing wrong now, only on a bigger scale. It's having to print way more money. It's having to bail out way more companies, right? The deficits that we had back then are far bigger now. And people think, well, we got away with it back then, right? We printed all this money and we didn't have to suffer any adverse consequences. The dollar didn't crash. Bonds didn't crash. We didn't have the inflation, right? We had a slow recovery, but it was the longest one ever. We had a recovery, and look, real estate went back up, stocks went back up. So people think that because we got away with it before, we're going to get away with it again. We're not, right? People have been lulled into a false sense of security, complacency, in thinking that we can print all this money and not have any negative consequences. Well, they're going to be even worse now than they would have been had we had them a decade ago.
So, Peter, let's talk about that, because there's all this money printing, and we did see that movie before, and you brought our attention to that several times on this show. We've talked about the latest round of Twist or QE or whatever they were calling it at the time. And now more money printing than ever. It's actually working, or some of it's working its way into the hands of people who are spending it on rent or food or whatever they need. Where does that all show up eventually? I know you have opinions on gold, on the dollar. What do you think this looks like in a year or two?
Well, it is going to show up in consumer prices in a big, big way. Because, there are two things that are going on now in the economy. On the supply side, we're having a reduction in supply, right? Because if fewer people are working, well, they're not producing products that they produced in the past. They're not providing services that they were out there providing in the past. So the supply of stuff is going down, right? And certainly, a lot of the stuff that we were importing from countries like China, they're not making as much stuff anymore to export to us. They might consume it themselves. So we're not going to be able to import as much stuff. We're not going to make as much stuff. So there's less stuff. At the same time, there's more money. Right? People have more money now in many cases than they had before when they were making stuff, right? Now they're getting checks for doing nothing. So you have more money and less stuff, right? Obviously, consumer prices are going to go way up. And, a way to look at that kind of in a microcosm is look what happened to airfares, right? In the weeks that immediately followed COVID-19, ticket prices collapsed. I mean, the airlines were selling tickets. I remember a guy was working for me was looking at tickets from San Juan to Boston. It was $3 to get a ticket. Now that's less than the Uber ride to get to the airport. I mean, it's like, this is crazy, because nobody was buying tickets. So they were just giving them away because the planes were going to fly anyway and the seats were empty. Well, anyway, now I just looked. We were looking at buying tickets to go back to Connecticut, right? I've never seen them this high now, because what's happened is the airlines canceled a bunch of flights. So now the supply of flights is down, right? Delta, which used to have flights every day, now there's only a few a week. A lot of days, JetBlue used to have a flight directly to Hartford, which sometimes we could take, cancel that. So a lot of times you have to have you have to go connecting. But I used to like to fly Delta Business. They had the best business class seat nonstop. And I looked, the last ticket I bought nonstop was $343 per ticket, which is not a bad price. And the coach was only like $125, $150. When I went back online on Delta, the cheapest business class I could find one way was over $1,800. And on those flights, even the coach seats were $1,600, 10 times what they were before COVID. So what happens is, even though the demand to fly went down, right, not as many people were buying tickets, the supply of seats went down even more. So then if you really wanted to fly, it cost you. And so that's what's going to happen in this recession. Yes, demand is going to go down. Everybody is focusing on that. People are going to be unemployed. People aren't making as much money. People have to start rebuilding their savings now that they had a wake-up call. Hey, I'm broke. I can't pay my rent, right? So people are going to cut back on their spending. And so demand will be down, but supply is going to go down even more. So prices are going to rise even as demand falls. We haven't experienced that before. Well, we did it in the 1970s, but we haven't experienced it recently. That's what's been able to mitigate every downturn. Now, as far as the finance is concerned, see, I think this is the straw that breaks the camel's back for the dollar. That the reason we were able to get away with these monetary mistakes in the past was because the dollar survived as the reserve currency. And it's still surviving today. That's why we've been able to print trillions and trillions this year, and we haven't seen the dollar tank. But I think we're going to, cross the line, right, on how much debt the world is willing to allow and continue to accept the dollar as the reserve. See, the problem is you don't know where that line is until you've crossed it, right? Because it surprises me that we haven't already crossed it. But I think we're going to do it in this cycle. And it may be early in this cycle. It may be before the end of this year. Who knows? But we are going to pass the point of no return, and then the dollar is going to collapse. And then all the inflation chickens come home to roost. The prices really skyrocket. Interest rates soar. And, right now, interest on the national debt is about, $350 billion a year because we're paying 1.5%, right? What happens when interest rates go to 5%? We'd be paying more on interest than we pay on Medicare. And in fact, if interest rates went to 10% by the time the national debt was at 30 trillion, which is probably next year, I think interest on the national debt would be more than the national defense, Medicare, and Social Security combined. In fact, we could be at a point where 100% of our tax revenue would be needed just to pay the interest on the national debt. We'd have to shut down everything else government did, which obviously we're not going to do. So we're going to default, right? Either we do it honestly or we do it through inflation. My bet is through inflation. So all these dollar-denominated assets become worthless. And so people need to, do what I've been advocating as quickly as they can. I mean, I was telling people to do it too early, but better than too late, because people are about to get wiped out who, don't have gold, don't have silver, don't have mining stocks, right? Don't have overseas assets where income streams are coming in currencies that are not the dollar, the currencies that are going to gain the purchasing power that the dollar loses.
Well, that's something you've been teaching us about for quite some time, looking at companies that are in other places that aren't as beholden to the dollar or don't have the same concerns. All currencies are fiat. So that's, the back to the, cleanest dirty shirt in the hamper. It's been the dollar, but there's been moves already, right? China and Russia and lots of folks out there who are holding these dollars as they go down in value. They're looking for an alternative. What do you think how does that manifest? How does the dollar get knocked out of the reserve currency, and what takes its place?
Yeah, well, remember, we're only the cleanest dirty shirt in the hamper by default.
Right.
And it's only because that we are the reserve currency that our shirt looks less dirty, right? Because it's almost like the worse things get around the world, the more money comes into the U.S. And so as things get bad, we get more money to borrow and spend. So we actually benefit from everybody else's problem because when everybody has a problem, they lend us more money.
Right.
But what that means is that we're able to make our own problems worse because the more money we borrow, the bigger our debt bubble gets. So that's the paradox is the worse things get, the more money the world wants to loan us, which only allows us to dig ourselves into an even deeper hole than the one that everybody is ignoring. So we're actually in worse shape. We're actually the dirtiest shirt in that hamper, except no one smells it yet, right? Because we're the reserve currency. So, but at some point, right, the stench is going to be so bad that, how big can these deficits get, right? We're at what, 3-4 trillion a year? We're about to find out, right? Because we're going to pass that point. But, other people make the mistake. They say, well, the dollar is always going to be the reserve currency because there's no other currency that can take its place. And I would agree in that there's no other currency that deserves to be the reserve currency. But then neither does the dollar, right? So if there are no currencies, including the dollar, that should be the reserve currency, then why should the dollar continue in that role when we have a perfect alternative, gold, right? Gold was the reserve asset before the dollar. It wasn't the British pound. It was gold. The pound was the dominant currency, but gold was the reserve, right? We created this situation where the dollar became a reserve instead of gold only because the dollar was as good as gold. Because at the time that we got the world to accept this arrangement, if you had $35, you had an ounce of gold. You could get it whenever you wanted. We had all the gold. We were the world's richest creditor nation. We had these huge trade surpluses. I mean, everything that was manufactured in America. If you wanted to buy anything, you needed dollars. So we had all the gold. We had all the stuff. It made sense. And we told the world, hey, if you hold dollars, if you hold gold, you don't get any interest on your gold. But if you let us store your gold in Fort Knox, whatever, and we'll just give you dollars, you can buy U.S. treasuries. And you're going to get what, 7%, 8%, whatever the yields were back then. And that was like a good deal because the world got to have their gold and interest too, right? Hey, why hold gold and get nothing when we can get these treasuries and get all this interest? We get our gold whenever we want. So that's the reason that the world went on this standard. Of course, they would never agree to it based on today's terms. You take these dollars that are backed by nothing, and by the way, you buy treasuries and you're going to get no yield. Nobody would do it, right? So we would never have the dollar as the reserve if we tried to go on it now. It's only because it's left over from what we started with, right? So there's a lot of inertia to giving it up. We went off the gold standard in 1971. The dollar tanked, lost 2/3 of its value. Gold went from 35 to 850. But even though the dollar was marked down, it stayed as the reserve currency at a lower exchange rate. And that's what really led to these big problems, because once we realized that we could just print money without having any gold to back it up, that's when we really started to grow government and grow deficits. But the world went along with it. And now we're in a situation today where, we're completely run amok because we've been able to do this for so long. But I think what happens is when the world says enough, they don't try to put the crown of, a king on another currency. Because again, no currency can offer what America offered at the time of Bretton Woods, after the Second World War. There's nobody that can equal what we were. And, look at all the damage that was done to the world by giving the U.S. the power to print the reserve currency. Why, bestow that power on the ECB or on Japan or on China? Who wants to give that power to the Chinese? Nobody. So we want to take the power away from everybody and go back to real money, right? Which would be gold. So that's where we're headed. Gold's going to be remonetized. All the central banks already have gold in reserve. They just need more of it. And of course, when the price goes up to 10,000 or 20,000, that will accomplish a lot of it because they don't have to buy it. What they own just gains in value. And so now their composition of reserves is much higher in gold just simply by market appreciation, which is going to happen. But of course, other central banks are going to buy more gold. But this is going to be the big game changer for the U.S., right? Because if your country is not a reserve currency, if you're New Zealand, if you're Sweden, right? There's no change for you. You're just having gold as reserves instead of dollars. The New Zealand central bank can't print dollars just like they can't print gold. So to them, it's like, okay, we're just going to use gold instead of dollars, right? Doesn't change for them. The big change is for America. Because, see, we used to be able to print dollars. We can't print gold, right? So now all of a sudden, we're the country that goes from living beyond its means to living within its means. Right? Now, if we want to import something, we have to export something to pay for it. So it's a whole new game. So America has the most to lose short term, right? Long term, I think it's a win for everybody to go back to sound money. But in the short run, the pain will be felt most intensely in America because Americans experience the gain of being the issuer of reserve currency, being able to create into thin air money that cost us nothing to produce in the way of resources and just exchange it for all the goods that other countries produced at great expenditures to their own economies, right? So we've lived beyond our means. We consume what we don't produce. We borrow what we don't save. All that's going to come to an end. This whole phony economy that was built on the foundation of the dollar being the reserve currency is going to implode. And so it's going to be a big game changer for us. It's going to be a big game changer for American citizens who are going to get wiped out, people who are retired, who are going to watch their money retire, and now they're going to have to go back to work doing who knows what. But it's more important for Americans to understand this and prepare for it in advance, because Americans are going to suffer. In fact, there's going to be a lot of people in the world who are going to benefit from this, because if America was living beyond its means, that's only possible because the rest of the world is living beneath its means. If we consume more than we produce, that must mean that the rest of the world produced less than it consumed. If we're borrowing more than we save, the rest of the world saved more than they borrowed. So our loss is somebody's gain, right? Well, if you're an American citizen, but you own foreign assets, then you gain too, right? Because you also gain the purchasing power that the Americans who have dollars lose.
Peter, I've just been following for the last 10 years China and Russia, and the rumors that China has a whole lot more gold than they're saying they do, and they've overtly called for a de-dollarization of the world. They put into place the Asian Infrastructure Bank, the Shanghai Gold Exchange. So I guess my question is, do you think that we go straight from a U.S. dollar reserve to gold, or do you think that China is in a position to step up and introduce a gold-backed yuan with the strength of their manufacturing economy and the size of their population, and really a knockout punch to America as things heat up?
Well, that would be the same thing. So if what you're saying is the Chinese decide to do what America did once before, right? Hey, we're going to peg our currency, the yuan, to gold. We're going to make it convertible into gold. We're going to take the Hong Kong dollar now and decouple it from the US dollar, and we'll link it to the yuan or something like that. And then they create a yuan that's backed by gold, right? Well, obviously, a yuan backed by gold is better than a dollar backed by nothing. The question is, will the world trust the Chinese to live up to that commitment, right? Because America didn't. I mean, we did for a while, but then we abused it. So if you're gonna go away from the dollar, do you necessarily go to the yuan backed by gold? Why not just get your own gold? I mean, what would be, now again, they can make the same deal that we did. We'll pay you interest, right? You could take your yuan and buy debt. But that very well may happen, and maybe some central banks will hold some yuan in reserves for that reason. But I think a lot of central banks will say, why have that added counterparty risk? We can hold our own gold, right? But either way, you're talking about gold becoming the reserve, because even if the yuan ends up being more of a reserve, if the yuan itself is backed by gold, then the world is still on a gold standard. I mean, even when we were on a dollar standard, we were still de facto on a gold standard. Because if the mark was backed by the dollar, and then the dollar was backed by gold, by the associative property, the mark was backed by gold. They just did it through the dollar, right? That was where the world screwed up. Everybody trusted America, to be honest. And the minute we got the world's trust, right, well, we screwed everybody, right? We squandered that because the politicians couldn't resist, right? We could just print money. We can give voters all this free stuff, right? And we don't have to pay for it. So, but even if what you're saying happens, that's the same thing, right? What I don't think is going to happen is you're going to get some other fiat currency that just is going to take over for the dollar, because the world is not going to buy into that. Hey, we just lost everything in the dollar, so let's put our faith into the euro or the yuan. What's the difference? It's just paper. So I think once the dollar goes, then it's like, okay, any currency can go, right? I mean, because right now, let's say some South America currency collapses, right? People are like, oh, that's okay. It's just a peso, right? Because, the dollar's still steady. So you can see like a hyperinflation in some smaller countries where the overall confidence in fiat money in general doesn't go away, right? It's still there for the larger economies, even if you have some small, like a Zimbabwe or something where there's hyperinflation. But if you have that in the US dollar, I don't think that's an event that can just happen and people say, okay, well, that's just the dollar. The euro's fine. No need to worry about that, right? No need to worry about the yen. I mean, if the dollar collapses, I mean, all bets are off, right? So I think then you're going to have to see a move to gold. I think that's the only thing that people will trust. Now, I know there are some people out there that are like, well, it's going to be Bitcoin, right? Oh, Bitcoin is what, but, I just can't see that happening either, right? I just don't see people are going to go from putting their trust in something that's intrinsically worthless, like a piece of paper, and then put their trust into something else that's intrinsically worthless, like a string of numbers that only exists in cyberspace. So I think that the world is going to need to go back to something that has proven that it works, that has worked in the past successfully for not only hundreds of years, but thousands of years. And something that central banks already own, which is gold. They have gold, right? Gold is a monetary asset right now. We just have to utilize it more. And we utilized it in the past. We do it again, And I don't think it's a big game changer because I don't think it means that people are going to start transacting directly in gold coins. They don't have to. You just need something tangible to back up your paper because then it's real currency. When currency is backed by real money, it's legitimate currency. It's only when it's backed by nothing that it becomes fiat.
So that's actually a really good point because when you think about it, the concern is that that somebody else would come along and supplant the dollar, but it really doesn't matter who it is. If it's gold, then the dollar still goes south, and the Americans are really the ones affected by it. Now, Jim Rickards has been for a long time talking about the whole idea of SDRs, special drawing rights, and the idea, I guess, behind it is that the Federal Reserve and then the International Monetary Fund, the IMF behind them, not going to want to let go of the ability to control everything through the issuance of paper currency. Do you think that where we're headed now with the way the U.S. has handled the dollar and kind of de facto with the IMF being kind of an extension of the U.S., do you think the world is going to trust the IMF and an SDR for international trade, or do you think it just goes right through that directly to gold?
I mean, I don't think so. Would you? Would you trust a special drawing right? I mean, who the hell even knows what that is? I mean, that seems to me to be more murky than a dollar or a euro. And all the SDRs are just paper issued by the IMF that are backed by those other fiat currencies. The biggest one being the dollar. I mean, if the dollar's no good, what good is a special drawing right backed up by dollars? So I just don't see that. I mean, I see the logic where the government doesn't want to give up that power to the market. You see, because when the government gets people accepting fiat, then, they have more control over real money, which puts controls on government, keeps government honest. But there are a lot of countries that are using this system where they still have controls because they don't print dollars, right? There are a lot of countries that still have to live by economic rules. If they run big deficits, if they print too much money, their currencies go down, inflation goes up. If their trade deficits get too big, their currencies go down. So you still have countries that are still having to live by these rules. So for them, right, going to gold doesn't mean that they've surrendered any power because they didn't have it anyway, right? It is the big countries, right, the ECB to an extent, or some of these big banks, but nobody benefits more from this current system than the United States, at least in the short run. I mean, nobody has probably done more damage to their long-term viability as an economy than the U.S. Because we've lived with this system for so long, we're ill-prepared to live with a real system, right? It's like, if you take a village and let's say they all used to, fish for a living, and I mean, that's how they fed themselves. They went out fishing, and then you start giving them free fish, and generations go by, and then nobody even knows how to fish, right? And then you take the free fish away, now what happens? they're all going to starve to death. I mean, they had it good for a while, but then the gravy train came to an end. And so we've kept this phony economy going for so long where we didn't have to make stuff because we could just import what anybody else made. Didn't matter. We can have a service sector economy. We didn't need the production and all the pollution that goes along with it. And we didn't have to save money, right? We could just have whatever we wanted. We can indulge ourselves right now. I mean, we could just go out and buy stuff on credit cards. Who needs to save up for the stuff that we want? Let's just buy the stuff we want right now, right? So we built this, just-in-time, crazy bubble economy. And so because we've kept it going for so long, we're going to suffer dramatically when it goes away. So, American politicians obviously want to keep this going as long as they can. But this exacts a heavy burden on the rest of the world that has to, subsidize it, that has to shoulder that burden. And, at some point it's, no mas, we're not doing it anymore. And, until the world does that, we will continue to go deeper and deeper into debt. Why should we ever do the right thing when the world makes it so much easier to do the wrong thing, right? Why bite the bullet? Why cut government spending? Why raise somebody's taxes? Why eliminate a program if the world will just let us keep printing money? And I think now that we've been able to get away with what we've just done, people are even asking that. Hey, why even have taxes? What's the point? If we could just print money, then why do we have any taxes? Right? Why don't we just print it all? I mean, we're printing more than half of what the government spends right now. Why not just print the other half? Right? I mean, so we're already saying this, and the world is like, oh my God, look what we've done. Right? They're like Frankenstein, and we're the monster.
Yeah, I think that's where, people don't understand that where the role of manufacturing comes in, because if you're not producing anything, then you don't have anything to sell. You can only be a buyer, and you can only get away with that as long as you have an unlimited checkbook. If America loses the dollar as a world's reserve currency, basically that's like cutting off the credit line. And now you've got to get back in the business of actually making things. So, let's assume that all of this plays out as you're saying, the dollar dies or has a very limited role now, is no longer a reserve currency. The path forward for the United States, if I'm hearing you correctly, is that manufacturing. We got to get back into the business of manufacturing and selling goods to the world again.
Well, if we want to consume, we're going to have to produce, so unless we want to give up all these goods, we're going to have to make them. Now, we don't have to make all the stuff we consume, but we have to make something, because if we want to import what somebody else produces, we need to export something for them, right? So we're going to have a comparative advantage again in certain things so that we can export to import other things. And so in order to make that happen, I mean, we're going to have to reverse policy. We're going to have to dramatically shrink the size of our government, huge cuts to government spending, so that we can return those resources to the private sector. We're going to have to allow interest rates to rise substantially, which means a lot of existing debt is going to default, a lot of bankruptcies, a lot of failures, a lot of people are going to lose money. But now people are going to have to start working again, but not spending everything that they earn. They're going to have to start putting money aside so that that money can now be invested productively in new plant and equipment, in new machines, in training new workers, so that we can do this stuff. And so what that means is, in the short run, our standard of living has to go down, right, as measured by our consumption, our current consumption. We have to consume less, and we have to produce more. We have to spend less, we have to save more. And so, but a lot of losses, a lot of people are going to have to wake up to a crude reality. A lot of people have been promised something that they're not going to get. There are a lot of people that think they're going to retire. They're not going to. The government has no money to pay Social Security, and their portfolios are going to get wiped out. So we're going to have to come to terms with economic reality and stop looking for an excuse, like a government bailout, we have this COVID-19 problem, and everybody thinks, okay, this is bad, so the government needs to make everybody whole. The government can't make anybody whole because the government has no money. The government relies on the people. This is one of the most startling aspects of this, but, they keep evoking World War II. Like, oh, this is like World War II, right? We have to sacrifice like World War II. Well, we're not. During World War II, the government came to the people and said, we need your money to fight this war. And so taxes tripled, right? In 1941, fewer than 3% of the American public paid the income tax. By 1942, better than 30% of the American public paid the income tax. They introduced the withholding tax for the first time in 1942. There was no withholding tax until 1942. So all of a sudden, people started having taxes taken out of their pay that weren't even paying the income tax. And then on top of that, the government said, we just tripled your taxes, but that's not enough to pay for this war. We need you to really step up and buy these war bonds. We need you to loan us all this money. And so the American people stepped up to the plate and loaned the U.S. government the equivalent of trillions of dollars out of their savings that they had. And of course, other things that they did is they stopped going out. They didn't go to restaurants. They didn't take vacations. They took all their income and loaned it to the U.S. government so we could fight the war, so we could take 15 million Americans and clothe them and feed them and supply them in Europe and Japan, right? That's what we did. So the people supported the government. Now, what's happening now? The opposite. The government is saying, we have a crisis, so we're going to cut everybody's taxes. Nobody has to work any harder. We're going to print all this money, right? We're going to bail out all these businesses. If it was that easy, why didn't we do that during World War II? Why didn't Roosevelt say, hey, the Japanese just bombed Pearl Harbor, so we're going to cut everybody's taxes, right? We don't need you to buy these war bonds. We're just going to print all this money. You think we could have won that war by printing money? We'd have lost in a heartbeat. You can't print those tanks and bombers and all the stuff that we had, all those resources the resources needed to be freed up for the government to use them. So the private sector had to give up the resources so the government could have them. It's the same thing now. The government cannot support the people. That's what Americans are. Everybody is looking to the government to support them. And so that attitude has to change. People have to realize things are really bad, and there's nothing the government can do about it. They can't make it better. They can't give us checks. They can't bail us out. We have to roll up our sleeves and bail ourselves out by working hard, right? By saving and producing. But that's going to be a bitter pill that the public has to swallow, and there's not a politician in America that is going to ask a voter to swallow it. So the real problem we have now is that capitalism has been so discredited over the years by the damage that socialism and central banking have done. When we get this massive inflation and dollar collapse, the politicians are going to say, this is why capitalism doesn't work. Those greedy speculators, those evil corporations have jacked up these prices. They're profiteering. They're price gouging. We need the government totally to take over the economy. This isn't fair. This isn't right, right? And it is a rallying cry to go all in on socialism and for the United States to become a complete totalitarian state, right? Where they're not just ordering us to stay at home because of the COVID virus, right? Because now they've already basically established that precedent, right? Hey, they own us. They tell us what to do. So I mean, we're primed for that. So it's a very, very scary, circumstance that we're heading to right now. Not just, as an investor, but as an American, as somebody who likes freedom, because you might not just lose your money, but you'll lose your freedom too.
Well, the purpose of this whole series is to flatten the economic curve by getting more people informed about what's going on. I think a lot of people, when that World War II argument comes up, the idea, we weren't the world's reserve currency back then. That happened after World War II. And the thing that empowers all of this government bailout is that world's reserve currency status. And I think that we've made that clear that if that changes, America changes dramatically. And I think a lot of Americans don't understand that. Okay, so that was
and
awesome.
Russ, it's not about if that changes. It's about when, right? It's going to happen at some point, because the longer it is the reserve currency, the more unsustainable the imbalances get, because the longer we have the ability to do that, the longer we kick the can down the road. So instead of solving our problems, they get much worse. And so inevitably, there has to be a crisis that is precipitated by the dollar losing that reserve status, because until we lose the status, we will never act preemptively to preserve it, because there is no motivation for the powers that be to ever do that, right? Because all they can do is see to the next election. And so why should they precipitate a crisis that might not happen until after they're reelected? And so there is no impetus to do anything about it. It will not end until there's a crisis that is caused by the dollar losing that reserve status. So it is inevitable. It will happen, right? The only question is, how much time do we have, right? So it always reminds me of, the Clint Eastwood's line, do you feel lucky?
Yeah.
Because that's all it's about, right? Do you feel lucky? Do you want to take a chance and hold on to your dollars, right?
All right. Well, there's Peter Schiff. We're going to hear more from Peter when we get to our panel discussion at the end, but great stuff as always, my friend. Thanks for being with us today.
All right. Hey, appreciate you guys having me. And of course, remember, I got my own podcast. People can check out the Peter Schiff Show at schiffradio.com. I've been doing more podcasts, put them up on YouTube. Audience is growing there. I got about, I think, 340,000 almost YouTube subscribers. People listen on Schiff Radio. But most importantly is do something. Don't just listen to what I'm saying, but act on the advice that I'm giving. And don't worry that I've been giving it too early, right? Just make sure that you're prepared because if you wait too long, then that's it, right? Once the dollar collapses, there's no turning back the clock. So, contact me at Euro Pacific Capital, Schiff Gold to get your gold and silver. If you're outside the United States, you can go to EuroPacificFunds.com and, you can contact us. We do the asset management from Puerto Rico. I've got my 5 mutual funds, by the way. People can buy them at Schwab, Fidelity, E-Trade, all these different brokers have my funds on their platform, including my gold fund, which you could buy. So you don't actually have to set up an account with my broker dealer, although we're happy to have you as clients and work with you directly, or set up separately managed accounts and manage portfolios directly of foreign stocks with dividends or gold stocks, but you can buy those funds at your discount broker right now. And I would suggest that you move quickly to do that, or discuss it with one of my representatives. Get the phone number and everything at the website at Euro Pacific Capital. It's europac.com is the URL.
All right, that is perfect. There's Peter Schiff. Peter, as always, thank you for your time and your gigantic brain. Always good to see you.
Thank you.
Well, there you have it. We warned you. What a fire hose, the amazing Peter Schiff.
Yeah, Peter's great. And I think one of the things about Peter is Peter thinks in terms of principles. He understands the mechanics of the financial markets. He understands when they aren't functioning right, even though some of the outputs can be manipulated or some of the reporting can be spun to try to hide the reality. But he has the ability to cut through all of that and see the foundation, see the structure. And he, as you heard, is convinced that the structure has some fundamental weaknesses that are going to be exposed under the pressure of this crisis. Time will tell whether he's right again this time, but I think he's somebody that you definitely need to pay attention to and consider what he has to say. And more than that, think about how you can organize yourself so that at the very least you have a plan B, just in case Peter Schiff is right again.
Boy, I sure wish we had listened more intently to Peter in 2006, but I'm sure glad we're listening now. You'll also want to tune in our final episode when Peter's going to share some other pretty cool ideas. Hey, episode 4 is up next, and it's going to be a great one. Our friend Nomi Prinz is going to be with us, and she is a prolific author, but she's also a bank insider. She's worked with Chase Manhattan Bank, Bear Stearns, and Goldman Sachs, and got out. She has a lot to say. She's got great books, including Collusion, It Takes a Pillage, and All the President's Bankers. You're going to learn from her like we learned from her in the next episode. Next up, Nomi Prinz.
Hey everyone, thanks for watching. Before you go, 3 things. Number 1, click the subscribe button, because when we have more subscribers, it makes it easier for us to attract better guests to share great content with you. Number 2 is click the notification bell to be sure that you're notified when we put up new content. This is obviously an ongoing situation. We're going to have continuous discussions about it. You're going to want to make sure that you're kept up to date. And then number 3 is make sure you share it. Tell a friend. Help us flatten the economic curve by getting more financial education out there to people who need it. Okay, so you know what to do. Click the subscribe button, click the notification bell, and we'll see you in the next video.
Systems break, and suddenly your family, friends, and neighbors are distracted with Wall Street stock indexes and Washington political pandering. Many are unaware and unprepared. Like COVID-19, ignorance of looming financial perils is also a disease, and the system is fragile. But you can help. Financial education is the vaccine. Share this free video series while there's still time. Alert people to these serious issues. If things turn quickly, the financial support system could be overwhelmed to the point of collapse. Help flatten the curve and reduce the impact on the financial system. Wake up more people to prepare. You have nothing to lose and a lot to gain. Share this video directly or